The broadcast is now starting. All attendees are in listen-only mode.
Good evening. Can everybody see my screen and hear me? Great. Let's go ahead and get started. Hold on one second. Oh, all right. Don't know how to do that. Okay, let's go ahead and get started. Let's start talking about the S&P 500. There was a request to take a look at it from a longer time period. We can look at it starting with the daily chart, which we often do. This is my sentiment stages chart where I have an overlay trying to fit the common, capitulation, despondency, depression, apathy, indifference, reluctance, optimism, excitement, and exuberance stages of sentiment, and then going into the denial, fear, panic, depression, and back to capitulation as a visual overlay onto the chart. As you can see from where we are in Elliott wave wise, I think we're somewhere kind of in this middle area on that slope heading up towards the ultimate exuberance when we are nearing a pretty significant top as a primary degree wave 5 off of the March 2020 low, and that's completing 5 waves up from the March 2009 low. So after that 2008 2020, so that's completing 1, 2, 3, 4, 5 waves up. And at that point, we could certainly see a pretty large consolidation. Now, I'm not married to any particular measure of a move for a larger degree consolidation many years out in the future. I'm following the structure that I think we're still well inside a bullish move off of the March 2020 low. So that's what I'm focusing on mostly. I do think that there's potential that despite having a very big corrective move, a decade down the road, that it's possible that that entire move is a larger wave 2 inside a much more extended super cycle degree 5th wave that started in March 2009. Practically speaking, though, it doesn't make a difference if this is a giant primary ABC down back towards, at least towards the region of the 2000, January, February to March 2020 drop. If that might be the first target region, it doesn't matter what the larger structure is. That's a pretty significant move down that most people are going to want to have ample amounts of cash on hand to buy at that bottom, but as well as just be protected from a drop like that. But I think that's a problem for another day. And right now, we're looking at a minor degree wave 3 that is right now at let's start with the intermediate degree. So there is some discrepancy between the way that Mike G and Avi are counting inside of this primary degree wave 5 off of the March 2020 low and the way that Garrett and I are counting it. All of us are inside this intermediate degree wave 3. So for all of that, we're on the same page. Everybody's looking much higher over the next few years into probably towards the 6,000s for that primary degree wave 5. And all of us are still inside of this intermediate degree wave 3. That's where we start to differ in our counts a little bit, though, is because Garrett and I see the resistance from a 123.6% extension potentially topping either as a B wave and maybe an expanded flat still, which we'll look at a few other charts that maybe lean a little bit more to that version of a subwave count, or as an extension of this minor degree wave 3 that could have topped here, but this was not enough of a consolidation for me to reliably consider that this was all of the 4. So it's far more probable, in my opinion, that this was an extension of the minute degree wave 3, and that this is an extension of that minor degree wave 3 to the second of the 2 common fibs based on Fibonacci binball, and that we are into that resistance region. And now we're going to look at a smaller degree time frame and take a look at the variations within this count in terms of where further extension can take us to, provided what support levels are going to hold. And if those support levels break, a little bit of a closer look at the different ways of counting for this minor degree wave 4. And then hopefully that'll be a little bit more clear when we look at a few of the other index charts and that RSP chart and the QQEW equal weight charts that we also look at when you guys are with me, and things will make a little bit more sense. So jumping into the smaller degree, which I've been tracking on my tab labeled Uber Accelerated Bullish Count, which is now just a remaining name that is there and not because it's just the count that I've been following. But back in late 2020, I started calling this tab the Uber Accelerated Bullish Count, but that's what very quickly became my primary wave count. So in terms of extension, we can count this move at the beginning of December as some other degree wave 4, whether it is another alt of this wave 4, or whether it's 1, 2, 3, 4, just a deep 4 inside this fifth, and this is just the extension of this fifth wave up to here. I have it counted at the minuet degree, but it really could be 1 degree smaller than that in terms of the potential for further extension up towards the 4860 region we had talked about before as the exact 123.6% extension. If we are getting this extension and can hold this 4680s as a 4th wave, maybe dipping into the 4670 region, but that starts to get really iffy, then it does look like if we're going to get a 5th wave up, it should target at least around 4900. And again, I will count that as an extension of my 3, and at that point be looking for another consolidation back towards this 4400 region, plus or minus 50 points or so, as the normal support region that we should see from an extension of 3 up to here as the ABC for wave 4. If we fail to hold as support for this smaller degree 4th wave, which I said can maybe give it to somewhere around the 4670 region, but below that it starts to get very, very difficult to count this as still a 4th wave, looking for one more extension higher. And we have to start considering that either this was ABC up for wave 1, an ABC up for wave 3, and an ABC up for wave 5 of this same 5th wave of 3 topping here, which we'll see there's some support for count like that in a couple of the other index charts that we're going to look at, namely the RSP, or that this, despite this getting to a higher high, that it is still the B wave that we were worried about getting when we had this initial move down at the beginning of December. We were looking for a B wave bounce. That move got a strong initial move up, which we said could be just the A wave of a wider flat. We did get a big drop down as a B wave in what could have been that wider flat. But once we got over the 4735 region, it was harder to reliably still call that just an ABC flat for a B wave. And we really had to still consider that this was part of the extension target. But despite this getting a substantially higher high, we have seen that many times before where a B wave inside of a 4th gets a substantially higher high because the underlying trend is still very, very bullish. So if we go back to our daily chart here, we can see that we're still very much inside the heart of a very large degree bullish move, this primary wave 5. And we can look back and say, oh, you know what? This primary degree wave 4 had a B wave that made a substantially higher high, but then still got a nasty drop down as a C wave and a wider flat. So that's exactly what we could be seeing right here. What we have a risk of if we cannot hold that support for a small degree fourth wave in an extension pattern. So hopefully that gives you guys some very clear parameters. If this is an initiation for the start of a C wave, as the yellow count, I would really like to see a corrective bounce soon as a wave 2. But this might be 1, 2, 3, and it needs a fourth and a fifth wave down for wave 1, and then a wave 2 bounce, and then 3, 4, 5 down for the C wave. And this could certainly stretch. I mean, I have it here as a January move, but it could easily take into February to get to some lower targets, depending on how quickly and whether or not that plays out as an impulse. If this was the top of 3 right here, then we're looking for a new ABC move that can probably take us down towards the 44 to 4300 region as an A, B, C move, and that would probably take into February or early March. And this would just be the start of the A, B, C for an A wave, and then a B wave bounce, and then a C wave down. So with those potentials in mind, and then if we do hold here in this 4670s as a fourth wave, and we get the fifth wave extension towards 4900, then we'd be looking for a new A, B, C wave down, again, ideally towards this 4400 region, which is going to be the 200-day moving average. That might change a little bit between now and March, but that's what we'd be looking for from that higher high. So now, with that in mind, let's jump over here and take a look at the RSP chart, which is the equal weight version of the S&P 500. And here we had talked about the potential for the green extension further into our target box. And the way that this moved up, we can certainly be count this as a B wave top, the way that we just looked at there, with as an A B wave high at a higher high, and an expanded flat for a wave 4, coming back towards this 150 region, or as the fifth wave in this blue ending diagonal. So instead of a less clear, clearly completed move, or counting this as some alt wave 4 and then a more compressed fifth wave up into our target box, we can count this as 1, 2, 3, 4, 5 in a diagonal. All of the subwaves here clearly look choppy. This could subdivide into 5 waves, which is why that's a little bit less clear as far as a diagonal. But this clearly looks like an ABC up, and it is very typical to see this type of sharp reversal from the end of a diagonal. And we also know that a diagonal is often going to target support back towards the starting region of that diagonal. So that gives us a target somewhere in the 150 to 147, 146 region as one potential wave target. So that would give us maybe a little bit of a higher ABC here if we're going based on the diagonal completing and where normal support is. We also know that normal fib support for a fourth wave is going to be somewhere in between the 236 or the 382 retrace. And we also know that a fourth wave is often going to target the same region as the fourth of 1 degree smaller inside the prior third, which is somewhere in between 152.70 and also 145s. So that gives us a really nice window of targeted support, a little bit above what our original target was when it looked like we were topping into this zone as the 3, 4, and 5 of 3. But that's pretty par for the course given the extension that we have, that we moved up to the top of this target box, so we're going to be closer to the top of this target box for support. There is still potential that this is trying to extend further, but as we said last time when we talked earlier in December, I didn't see a clear high probability subwave target off of the December lows that really was clearly targeting this higher high in the 170 to 172 region, similar to that green extension in the S&P. But again, if we are going to hold support in this 160 region as a fourth wave, then we can get a fifth wave up higher, maybe at least towards about the 167.50 to 168 as one more high. But it is certainly not needed on the RSP chart. So sticking with the equal weights, let's jump over to our QQEW. Michael, yeah, I'll get to the Russell. We'll take a look at the RTY chart instead of IWM or other things. So the QQEW chart is the equal weight of the NASDAQ, or equal weight version of the Qs. And we talked about this ending diagonal. Well, we talked about it counting as a degree ahead of the S&P. So the same larger primary degree wave 5 off of the March 2020 low. I was going to try and squeeze there it is. Scoot this over a little bit just for our purposes today. So in this larger primary degree wave 5, the same primary degree wave 5, the QQEW counts less reliably as a wave 1 and a wave 2 in April or June. And looks more based on a lot of the individual components that Garrett and I track in stock waves, looks a lot more like it started off of the March 2020 low as a 1-2-1-2 inside the larger primary wave 5. Based on that count, it looks like we have completed a larger fifth wave. And whether we count this as 1, 2, 3, 4 in a very extended fifth of that fifth wave, or whether we move the minor degree wave 3 to here and then count 1, 2, 3, 4, 5 as just this fifth from here, that really is 6 of one, half dozen the other. The important thing is that it looks more like it is topping or topped in the intermediate degree, that's the parentheses wave 3, and it is starting a larger consolidation as the intermediate degree wave 4. So that means where the S&P or RSP is potentially completing an A, B, and getting a C wave down as a fourth, then getting a fifth wave up for its parentheses wave 3, the NASDAQ, or at least the QQE chart, looks like it might only get a B wave and then a C wave lower in the parentheses wave 4 before it is ready to head up towards the 150 region for parentheses wave 5. Zooming into this a little bit closer, this is one of the charts that Garrett and I were pointing to and warning that despite how lots of other things looked more bullish and were making higher highs last week, this looked very clearly like an ABC up still and was holding under the prior high as a more standard B wave of a flat. So that gave us the risk of a potential C wave down, targeting the 111 to 109 as normal fib extensions. If this is still just a wave 1, then this could certainly be extending lower down towards the 108 to 106 region. But if it is just wave 1, it should be due for a bounce. If it's further along, then maybe we can be holding closer to that 111, 109, and then getting a bigger B wave bounce sooner. So now that we looked at the equal weight version of the NASDAQ, let's take a look at the NASDAQ itself. So we can see similar structure on the NASDAQ itself, off of the March low, counting 1, 2, 3, 4, 5 waves up as a potential diagonal to complete the fifth wave of that intermediate degree wave 3. And it came very, very close also to a new high, but held as a very clearly ABC flat looking B wave, which can be just in the start of the A wave of a larger wave 4 bounce. As we were talking about on the RSP chart, we know that a fourth wave in guidelines for a fourth wave in Elliott wave we have a couple of different guidelines. One is the region of the prior wave 4 from inside that prior 3. Also the region of the wave 2 of the extended 5th, or the starting region of the ending diagonal, or the 382 is going to be an ideal level. So there's a lot of confluence in this 13,000 region for support for this larger fourth wave in the NASDAQ. It should be an A, B, C wave move. Given that it should be an A, B, C wave move, I think maybe we can delete this set of subwaves and possibly look for this to get more extension here as just the A wave. And maybe we'll give that a little bit higher, closer to the 13,500 region. So again, this could just be wave 1 of the C wave starting, could get a corrective bounce, which really should hold under the 16,400 region, and then we can fill out 3, 4, 5 down. If we get over the prior high of December, which was 16,670, then we have to consider potential extension with, fib targets anywhere up into the 1700s and maybe 17,000 and even up towards 18,000. There is no clear Elliott wave count that I can see for extension towards that region. But if we're going to fail to hold as the B wave top, then that's something that we would have to consider. And then the last couple of days, I think I have a smaller degree count here. The last few days was looking at, our initial moves off of the high from that possible B wave were not clearly impulsive. But we did get, after this move down, we got a pretty clear ABC bounce. So we're looking for another measured move. And then from there, we're looking for another bounce as an ABC that wouldn't get over resistance. We got a nice ABC bounce, and then we got another measured move. At that point, from yet last night, we had reached the measured move objective from this move down to here as a possible 1, 2, 3, 4, 5. So ideally, if this was only corrective, we should have gotten more of a bounce and then a potential bigger move down. We got a little bit of a bounce and then have started to really unfurl here. So the risk is certainly that this is an initiation to the C wave that we are looking at here. We can be trying to complete that wave 1 and get a corrective bounce. Any corrective bounce, I would look at it if it, as long as it holds as a clear A, B, C corrective bounce into those 16,300s as resistance, I'm going to be looking at that as an opportunity to add to the hedges that I have, looking for a move down into the 14,000s for the NASDAQ. All right. I also want to take a look at the Dow and the NYSE chart before we jump over and look at the Russell. And we still have some time before we go to look at some of our commodities and mining stocks. So we saw that the NASDAQ looked like it was 1 degree ahead of the S&P inside the larger primary degree wave 5. And just as the NASDAQ looks like it is 1 degree ahead, topping in this intermediate degree wave 3, the Dow chart counts to me as though it is 1 degree behind. And so I have it as only topping in the third, maybe as an extension of that third, or as the B wave in a wider flat for the fourth wave, as we were talking about, but still inside the third of the intermediate degree wave 3. If we're going to hold the support here is the potential fourth wave, then I would probably just have this finishing out the green count as the extension, as the fifth wave already of 3, but still that gives it room for extension and to be behind, running behind or in the same place as the S&P. But certainly a risk here that this too is a higher high as a B wave in a wider expanded flat for the wave 4. And if that's the case, then this 5 of 3 can probably target a little bit higher. And so now with that in mind, I want to take a look at the NYA, which is the NYSE chart. And I think this is a really nice blend of those potentials. We can be right at potential support for any kind of wave 4 in a more bullish extension. If we fail to hold support here in the 17,000 and say 50 region, then it looks more like the start to our C wave down of this wider flat for the fourth wave. I really like the structure in the NYA, which is the chart of the NYSE, relative to the RSP chart, the equal weight version of the S&P, because I think the structure is very similar and it's hitting very similar fibs. We have that nice 5 waves up into the June high, the wave 2 retrace for the intermediate 1-2, a very clear looking 1-2 at the minor degree. We just hit an exact 100% extension of the intermediate 3. So for that minor degree wave 3 of parentheses 3, and are holding a nice wide high consolidation for the fourth wave, allowing for some stocks and sectors to rotate and get ready for the nice next longer term swing move to take us from the 16,000 region up towards the 20,000 region in the NYSE. Now let's take a look at the Russell. The Russell was one of those charts that Garrett and I looked at long, at the beginning at the summer of 2020, and said, we have a really clear looking 5 waves up. Then we held this really nice expanded wide running flat for the wave 2, and the Russell small cap names took off on a tear into the March high. From there, they reached their target for the minor degree wave 3 inside of our intermediate degree wave 3, and got some nice corrective action, and continued to get corrective action, holding support, normal support, or even actually a high level of support as that fourth wave, but in just a very, very wide corrective move when the rest of the market's headed higher. Then from here, we had a good potential for this to be all of a fourth wave, but we could not hold a high level of support inside a more bullish impulsive count. Once that high level of support in the 2370s broke, if we were still counting this as the fourth wave and looking at this as the start of the 5 of parentheses 3, I said this could be morphing into an ending diagonal where this is ABC up for wave 1, and failing to hold the 2370s can put us heading towards a deeper retrace target that was this green box here as a larger wave 1 and wave 2 of an ending diagonal heading up to here. We couldn't hold in that support box, and we dropped too deep for it to be reliable. Tried to maybe restart and get a stick save, but it was only a corrective move up, and then it went on and made a lower low. When we couldn't get more than a corrective move up, and even when we started to break that support, even though I wanted to see us hold this corrective box, I started warning that perhaps this fourth wave is still not complete, and that this could be an even more complex WXY pattern trying to head down towards the 2000 or 1990s for more of a fourth wave, especially if the S&P and the NASDAQ and the Dow were just then ready to start their equivalent fourth waves. This lower low could certainly have been all of that more complex fourth wave as an A, B, and 5 waves down for a C wave. But I just don't see it as so reliable when everything else looks like a B wave here and is threatening for lower if it can't hold support. So immediate support is in this 2170 region on the Russell. I would be counting that as a new A and B wave inside of a potential wave 1. And this is not at all for timing. I just have this compressed to try and show everything on a 6-hour chart, rather than having to switch and go up to a daily where everything gets too small to see any detail. it hasn't forced itself into being a diagonal yet. This can be 5 waves up as an impulsive start. It's a little bit large, though, for this to be 1, 2 of this wave 1, and a little bit small to be 1, 2 of 3, 4, 5 up towards the 2780s to 2800 region, which is our high probability target for the 5th wave of wave 3, because that's the 1382 extension for this intermediate degree wave 3. So given the fact that this seems too small to get us up to here and too big to be just wave 1 as an impulse, because that would take us well beyond, maybe even beyond the 3100 region, I like how this fits size-wise as a potential diagonal if we're going to hold support in the 2170 to 2160 region. Really, I think we need to hold 2180s here. But the bigger risk that I see is that it's going to fail to hold and maybe only get a corrective bounce and fill out at least more of this C wave down towards the 1990s, more in line with what we see in a lot of as the risk for that further downside in those other index charts. That is about all I have on equities. Any other questions? I think I answered some of the questions that were about diagonals versus impulses as we were talking about these, and got in the Russell. John says, does the 200 MA influence your wave 4 target? Yeah, so I think that's also one of those regions of support that we look for. It happens here on the Russell that it's acting more as resistance with the cluster of the moving averages. But if we go back to, say, the RSP, that certainly looks like it should be support for at least a bounce as the A wave. And depending on, how the moving average changes, it could be arcing back down and then starting to curl up in the high 148 region as we're filling out more of a C of 4 if this isn't all of the 4th wave here. So certainly do look at the moving average as well as those other guideline levels that EW gives us for a 4th wave. B waves can be sharp. So this is, so far it's only 3 waves down. It is sharper than I would like to see for a B wave. That's why I'm not aggressively trading the long side in the Russell itself. I certainly have a lot of individual stock positions, many of which are small caps. I'm closely monitoring my support and invalidation levels for all of those, particularly for entries more recently off of December lows. That's where my support is. Some things I trimmed as we got into highs with what looked like at least 5 waves up for wave 1 or whatever it was off of some of those December lows in a lot of those things, and a clear looking ABC for some other things. Mumshill, we'll take a look at bonds. Let's first move on to oil. If I can find the right, there we go. Find the right tab. I might switch over to the USO chart just because it's a little bit cleaner. My bigger concern on oil is that the November top was a truncated or double top for all of a larger intermediate degree wave 5. And off of that, we have a initial A wave down and have been filling out a very clear A, B, C bounce into, as a B wave, into normal resistance for a B wave. The 79 region was the 76.4% retrace, and we was just past a 100% extension of this C wave. So that opens the door to a potential attempt at a measured move down as this larger yellow C wave, which can be targeting the mid to high 50s or even down to the low 50s. So that is the big immediate risk on oil. The more bullish interpretation is that instead of this being all of a more muted fifth wave, we had been counting an impulse, but it failed to hold our support for a fourth wave, and then it even failed to hold our support for an alt deeper fourth wave to get a fifth wave up to the more normal size move they were looking at that was targeting the 100 region. So if this was not the top of that fifth wave, because it failed, it can be a larger wave one and wave two, even though it came almost to a 100% retrace of the wave one. And that's in a larger ending diagonal. This would be much further out to the side here. Just have it squeezed in there to see all of it together. That diagonal structure, we know that the third wave, all of the subwaves in a diagonal, should be ABC moves. So that means our third, even though it's a third wave up, should be an ABC move into the 97 to 100 region. We know that most A waves are ABC moves also. So the ABC that we have in yellow as our risky B wave here could easily just be the parentheses ABC for this A. So that becomes, if crude is more bullish, it is still very likely to fade from this resistance region and desperately needs to hold support right around 70.71. If this cannot hold as a clear A, B, C corrective retrace into the 70.71 and starts any kind of more violent move down or just fails to hold that support, it's very clearly looking like it's going to be heading down towards the 50s as the yellow B wave. So I posted earlier today that because I have a lot of long exposure in energy names, even though I trimmed a lot because of the move up off the December low, and many of them, this was a lower low in the energy names, which could have held a higher retrace for an equivalent purple wave 2 that we follow in XOM and XLE and XOP and all those other energy names that we follow in stock waves. I have them all color coded to show the similarity in the subwave structure, where this low counts as a wave 2 for most of those. They absolutely have to hold this low. And a lot of them look like an initial move up off of that low and due for a consolidation. So I was trimming a lot of those yesterday, and today I started looking at USO positioning, specifically targeting this C wave as well as just the B wave retrace. Both of them with the focus more as using them as hedges for my energy positions, but also as potentially profitable trades in their own right. So I was looking at butterfly put positions, looking at the March region, because that seems to fit nicely with the speed of and shape of the ABC so far, in the 45, centered in the 45 region, as well as a shorter term vertical put strategy playing into February for just a smaller move down into the 52 to 51 potential support region if we're going to hold that B wave. So that's oil. In terms of XLE and XOM, Linda, we can look at those tomorrow in the Stock Waves webinar. Andy, I'm not sure what PGJ is, but EWZ would be something to cover with Garrett in World Markets. Those foreign market ETFs often are really not good at using Elliott wave with because of currency and other skew issues. They really vary significantly from the underlying indexes that they're meant to track. So Garrett covers those underlying native indexes in world markets. You can use the ETFs to trade them as shorter term trading vehicles, but just you have to recognize that there is a lot of skew there. All right, let's go to gold. The gold chart, to find my clean larger degree tab here. So the gold chart, we've been counting as the potential start to a larger ending diagonal for a primary wave 5 that is ideally still targeting the 2200 or higher level. Should be a 5-wave move, but the third wave is likely to be an ABC because it looks best as a diagonal. If that's the case, we could be working on either an A, B, C for a larger A wave, and then getting another B and a C wave up into a more ideal target for all of that third, or we can have an A and a B wave in place already and are trying to start a purple C wave, which would really need to stretch quite a good deal as far as a normal C wave to get into that ideal 2000 to 2100 region for the parentheses wave 3. So when we zoom in on the gold chart, we can see the low in December is pretty important, as is a lot of lows, recent lows, for immediate bullish potential. And that is either a wider flat to this B wave inside the blue A of the parentheses wave 3, or as an alternate A and B inside as an A, B, C, and purple to that 3. So either way, we're holding a series of some higher lows off of that nice reversal that we got from December. But at this point, we really would like to see the 1797 region and probably even 17 or 1800 hold to maintain that more immediate bullish posture. Contrasting that with silver, silver actually made a lower low in September, so that counts as either an alternate low for the fourth wave, which I have counted 1 degree behind gold, or potentially as a B wave, where this is an A up. A lot of our individual mining stocks count better as ABC up for an A wave and then a B wave inside a larger potential primary wave 3, but as an ABC move in a diagonal. The purple alternate here off of the low is just if this is the start of a larger purple C wave up, this could be an A, B, C for a larger wave 1, and that entire move is an ending diagonal, which could chop around heading higher for quite some time. The other alternative is that this is a just very, very deep low that actually almost invalidated as 5 waves up and a very deep retrace for wave 1 and wave 2 inside that 5th wave up. Again, neither of these are the most reliable subwave counts off of the September or December low, but at least off of the December low, silver is equally as constructive as gold is, provided it holds the 2230s. Oh, yeah, sorry, we can go take a look at natural gas before we jump into GDX, since we talked about oil. Garrett and I are counting natural gas as a larger diagonal structure off of the June 2020 low. We have an ABC up for wave 1, a nice ABC wide flat for wave 2, an A, B, C wave up for the 3, just shy of a 1, 2, 3, 6 extension, which is pretty normal. We have a deeper looking retrace. It does make the trend lines expand a little bit, but it was actually just shy of a, it was exactly a 618 retrace of the third wave for that fourth. So we're looking for an A, B, C move up for the parentheses wave 5, and that could potentially complete a larger primary degree C wave. Don't have much clarity off of a low yet, and remember that this should be an A, B, C move higher, but the risk reward off of the 355 low is phenomenal for a move up. So I definitely have some UNG exposure and have been dabbling with a few futures trades here and there. Carla, we did look at that daily chart on gold. So heading for that larger primary degree wave 5 up, and then at that point can see a larger consolidation. All right, let's look at GDX. See if I have my larger, there we go. So as I mentioned, there's a lot of things that made lower lows in March of 2020, which looks more like a B wave or a wave 2 of a diagonal structure. And this move up did not clearly get 5 waves up. It looks more like 3 waves up, but it is too far to be just wave 1 of a primary wave 3. And we got much bigger retrace to be the 4th wave inside of a primary wave 3. And as I said, a lot of those individual names chart much better as an intermediate A and B wave inside the 3rd in a larger diagonal structure. So off of the October low, or we do have some things that made lower lows in December, we're looking for wave 1 of the parentheses wave C. That should target the 41 to 43 region and then get a wave 2 retrace. Right now, we're working on a potential start of the 3rd inside that wave 1. It got very, very deep for the wave 2, and as we said, there are a lot of stocks that did actually make a nominally lower low here, closer to an exact fib for their respective B waves. And so some of those can just be restarting an impulsive move up to get 1, 2, 3, 4, 5 waves up for wave 1. But GDX and GDXJ held as a possible wave 2, so we're looking at them as possibly starting a 3rd up. The subwave count inside that 3 of wave 1 is really not clear. There's a lot of ways that it can count, so we're not going to focus too much on that. GDXJ held a little bit higher, but also came very close to a 100% retrace. It does look a little bit more like 5 waves up and 3 waves down, though. So we're giving it a little bit more room as the benefit of the doubt for this being an impulse for the 3, 4, and 5 of wave 1. Same larger degree structure. One of the things that we look at in the metals, minings, and agriculture service a lot is the TXGM. Basically, this is your RSP for the GDX and GDXJ. It is a Canadian mining index that it functions a lot more like an equal weight version of the GDX. And that held a significantly, not only did it hold significantly higher relative to GDX and GDXJ at this December low, but they made lower lows here on December 15th, whereas this made a higher low. Not only that, but what we're counting as the expanded running flat for wave 2 is because it's a running flat, expanded running flat, that means it made a higher high for the B wave, and it did not make a lower low from what was counted as the A wave, and held a 618 retrace. So it is very, very constructive for this start of the same wave 1 of either a B wave, a C wave up, similar to the A, B, and C wave that we're looking at in GDX, but also the low in October still held more valid, a higher retrace relative to those, where it can still count as just the 3, 4 inside of its parentheses wave 3. And so it's getting 1, 2, 3, 4, 5 of a 5th. But certainly not opposed to this being even more bullish than that and getting a larger move up here as the blue parentheses C of primary wave 3. This would still be targeting the same wave 1. This just might need to be a little bit more compressed if this is just a 5th wave, versus this could get 3, 4, and 5 up to here if it's the blue count in line with the way we're counting those other indexes. Vinay, there are a number of stocks for natural gas, but their charts look very different from natural gas futures. So we cover RRC, SWN, and RCSWN. I'm blanking on the other one, maybe AR, as the three primary natural gas, primarily natural gas individual stocks that we cover in Stockwaves. Even those have some different counts from each other, but like they kind of oscillate in back and forth between trying to line up with what's going on with just the oil producers, the XLE and XOP charts, and trying to do their own thing and following natural gas a little bit more. So they kind of get tossed around a little bit. They're also a little bit smaller market cap. All right, let's move on and cover bonds a little bit before I lose my voice. Let's go to the larger degree count first. So we were looking at a potential bottom for our primary degree B wave in a larger cycle degree wave 5 of a huge, huge diagonal going back almost decades on the 30-year treasury, but had potentially counted this as the fourth wave in an orange parentheses, an orange alternate of this C wave, allowing for a lower low. And we saw that the 10-year actually was already making lower lows here in that same orange count. But the 30-year and TLT were trying to hold a little bit more bullish posture. This has since invalidated the potential start to the blue C wave and does look like it is heading towards that lower low as the orange ABC for the 5 of parentheses C after all. But could try for a stick save. I think it's pretty unlikely. And at this point, it would just be much better to make a lower low and then restart this wave 1 as just a new bullish count and be on the same page with the TY, which is the 10-year. So this can just get a new 5 waves up move for wave 1 if it can find support for the B wave soon. It keeps making nominal lower lows, but right now it is hitting an exact 50% retrace for this larger primary degree B wave. Now, I posted in my bonds update on the in the market section of EWT the other day that it's possible that TLT, which normally kind of is a mesh between the 30-year and the 10-year because it's meant to be a 20-plus year duration, that it usually follows more closely what US, the 30-year, or ZB, the bonds, are doing. But it might actually be leading the group and kind of doing its own thing. It does not look like the is much like the start of the C wave of wave 1. It looks a lot more like this can count as 5 waves up for our green wave 1 here, and we're just filling out an A, B, C retrace for wave 2. The fact that it made a higher high over what was our risk of a fourth wave in the orange that we were looking at on the 30-year and the 10-year futures makes this much less of a risk on the TLT chart. Zooming in, if this is in fact our green wave 1 and wave 2, we really should get a fourth and a fifth wave down inside this C wave. So this would be 1, 2, maybe A, B, C for the third, possibly a higher bounce closer to 147s for that fourth, and then a fifth wave down, ideally coming just under the 141, which is a 618 retrace. So it is certainly possible that TLT is kind of wagging the dog, so to speak, within the treasury market, where it is kind of forcing the hand of the 30-year and the 10-year, respectively. Sanjay, we can cover uranium and platinum tomorrow in the Stockwaves webinar, and we do look at those a lot in the metals, miners, and agriculture. The same with copper, although we can take a quick look at copper because We talked about this in the Monday webinar in the Metals, Miners, and Agriculture service. I was very concerned with the structure here into the October high that we were going to fill out a wider flat for the fourth wave. I was very unconvinced that this was all of a fourth. And even if it was all of a fourth, I think it relied on being ABC up or WXY up for wave one of an ending diagonal. And when we failed to hold the 420 region, it seemed more likely that we were trying to fill out more of that fourth wave. But while we had the potential for a very bearish drop once this support broke, we didn't get follow through. So the failure to get follow through, while it could be a wider flat as a wave one and a wave two down, as Garrett discussed in the webinar on Monday, it does look like this can be a more compressed 1, 2, 3, 4, 5 waves down as the A, B, C wave flat for our fourth wave here as a running flat completing. So this was not enough to reliably be all of the four, but a more complex, wider flat holding a higher low does give us a more reliable bottom. We have not yet cleared any significant resistance, but this allows the copper chart to be a little bit more in line with the bullish potential that we've been tracking on the FCX chart in both stock waves and in the mining stock service. Now, the FCX chart can get a retest of the relative recent low, but it is more bullish off of this low here as potential 5 waves up and a wave 2 retrace, and can just retest that wave 2 retrace with any near-term downside. All right, that pretty much gives us about an hour. Let me get this converted. If we go too much longer, it'll take forever for it to convert, and I'll upload it and see you guys next time. Have a great night.